Good morning, traders. It is the end of another month, and it's time for us to do our monthly compilation video where we review every single trade done in every single YouTube video. No cherry picking here. All I try and do day in and day out is to show you how we turn chaos into clarity. If you go on the home page, you can scroll down, you can see all the testimonials from members who have finally figured out how to trade using our system. You can go in and check out the chat room from the previous day. You can see all the trades we did there. As you continue to scroll down, you'll see all the videos that we've done. Now this summer, I took a little bit of time off, so I didn't do as many videos. For that reason, I'm combining July and August. Now that we're back into normal trading mode, I plan on doing more videos. So look forward to those. I hope you enjoy this video. Thank you.
Very good. So I'm going to conclude this by saying that RBLX is the pick of the day. It's the one that I like. We'll go into that 5-minute chart, take a look at what the stock did. Lots of strength early in the day on big volume, makes its high, gets back to that high. Yes, we had a strong day yesterday, so we want to see that relative strength preserved. We want to see the market's going to be opening about 4 S&P points lower today, which is nothing. So we'd like to see that early bid checked. We want to probe for support. We want to make sure that buyers are still engaged. We've had a few nice days, tail under body, shows that they're willing to buy on this support level and rally the market. So once support has been confirmed today, then we'll want to be watching RBLX. We'll want to be watching for relative strength. If we've got it and the stock can get through the high from today, we will want to take a position. So you can see that the high today was right around $40.35. If you're using Option Stalker Pro, you put up 1 OSI, you get that orange line above zero, stock above 40.35, and you have a decent market bid. You've got an excellent trade.
Good morning, traders. It is Friday, July 8th. We've got the jobs report coming out in about a half an hour. We're going to get into some market analysis. I like what I see in the market right now. My pick is going to be a bullish pick. Let's get started with my previous pick. That's how I like to start all the videos off. That way you can very quickly see how the trades are doing from one video to the next. RBLX. That was my pick from the last video, and it came in right here. I was looking for a bullish market move, and I got one. Unfortunately, the stock has not been able to advance. I still really, really like it. So let's take a quick look at what's happened. I did get the market direction right, by the way. Market has been moving higher, but the stock has had to consolidate some of these gains. That was a very long bar, and it tells me that the stock still wants to go higher. It's hitting some resistance right here at the 100-day moving average, and that's why we wanted to see it rally above this long candle right here. So the caveat to the trade was that we want to see the stock above $40.35. If the stock goes above $40.35, I like it, and I think you should buy it today. You don't have to rush in. You want to see a nice reaction to the to the unemployment report. If we get that, this stock is going to move higher, and here's why. You can see you've got this beautiful breakout here through horizontal resistance. It comes up to the 100-day, and it preserves all of these gains. So buyers are starting to come back in with greater conviction. We preserve half of this long green candle. Very, very important. So we've also, in doing so, preserved this breakout. I love the fact that the stock made a higher low double bottom. There's your low, higher low double bottom. This right here came when the QQQ was making a new 52-week low. So tech stocks are getting buried, and what does this stock do? Higher low double bottom. That tells me that buyers are lined up. Yes, we've got a really nice rally here. We're trying to get through this major resistance level. Once we close above that 40.35 level on the stock, I believe it is going to have another big leg higher. I love it. You can sell out of the money bullish put spreads. In that instance, I would key off of that 50-day moving average. It's going to continue out this way. You've also got the upward sloping trend line coming in, probably around the $32 level. Make sure that you close the trade down before earnings. I like to sell those spreads so that they expire before August 15th. So choose expirations before that. I like RBLX. This stock is going to be blowing through this 100-day moving average if we get the type of market rally that I think we're going to see. Well, first on the list is Apple. Love it. Look at that nice defined downward sloping trend line. 1, 2, 3, 4, 5 touches. The more touches, the better, because it validates that downward sloping trend line. Now we've got 3 stacked green candles in a row, higher low, double bottom through this horizontal support level. Little bit of a head and shoulders, but you'd have to get all the way up to here to break through that and confirm that pattern. I think the stock has a chance to do that. 50-day moving average right there. We want to make sure that Apple is staying above the 50-day moving average, and that is $146. So the caveat, excuse me, $145. So the caveat to the trade is the stock has to be above $145. We also want to see relative strength in the stock. You can see orange line above zero, relative strength. We'll go into a 5-minute chart on Apple. We want to see relative strength. We want to see relative strength before we start day trading it. So yesterday, if I had been putting out market comments saying, hey, here's a stock you should consider. I really like Apple, but we don't chase anything on the open. And that is what I would have told you. So you would not be buying in here. You'd be waiting for everything to settle down. You'd be waiting for the stock to regain its relative strength. Downward sloping trend line, breach to the upside. This would be your entry point in here because at that stage, you are confident that the market is going to be going higher. And there you have a nice entry point. If I get something like this, nice stacked candles through the high of the day, and then a compression, folks, I'm going to be taking my gains up there. That is a whopper of a gain. Beautiful, especially if you're trading options on Apple. Apple is going to be your pick of the day. We're going to take a look at some. Good morning, traders. It is Tuesday, July 12th. Let's get right to it. The last pick, actually, we'll get to the last pick in just a second. Last week I highlighted RBLX. It really ran higher and then it just kind of sat there. They needed to digest those gains for a few days, but I had reiterated on Friday before the open. So the video was produced before the open. I said, hey, I love RBLX. If the stock gets through 40.35, it's going to be a really nice day trading buy. There's your breakout right there. Stock ran $4 higher on Friday. You could have gotten in on this trade anywhere in here, but you had to take gains. Right now, we are only day trading. The market volatility is extreme. You don't know what's going to happen one day to the next. So when you get a bearish hammer off the high and a double top lower high, you've got to take some gains, especially when you have a 10% run in the stock in a matter of a couple of hours. RBLX did pan out, was a nice pick. You can see how it gave some of those gains back. Apple was the other stock that I thought would perform well on Friday. So let's take a look at that. And we'll go back. You can see a little weakness yesterday. The market sold off over the weekend. And there you can see Apple, very nice relative strength, orange line above zero. So you also had a nice day trading opportunity in Apple. Here you can see it's starting to lose a little bit of its relative strength. Got a little bit of a pullback here, gets toppy. Price action getting compressed, tiny little candles, get a nice long red candle off of the high. That's a signal that you need to take your gains. Stock pulls back, double bottom low right in here, higher, low, double bottom. Hey, this is looking pretty constructive. 1 OSI above zero, downward sloping trend line, breach to the upside. Yeah, you've got a nice little entry point in here where you could have made money on. And see, Alibaba is right at the top of the list. So these stocks tend to move a lot overnight because they're ADRs. And you can see how Baba sold off, never got off the deck. I believe it's indicated just a touch higher. Here's why I like this short. You can see orange line below zero on the daily chart, so it's starting to show some relative weakness. That upward sloping trend line right there has been breached to the downside, and you can draw one right like this that has many, many touches. The more touches, 1, 2, 3, 4, 5, 6, the better. You can also see that there is a horizontal resistance level right here, and there is a horizontal resistance level right here. The stock was not able to get through that horizontal resistance. Tails above body, long wicks, bearish hammers. You can see that those are indicating resistance. Now we've dropped through this horizontal support level and we've breached that upward sloping trend line. Let's see where the major moving averages come into play. So we'll overlay the 200 and the 100 day and the 50 day to see where they come into play. Lo and behold, that 200-day moving average is providing resistance. If you are looking for swing trades, which I'm pretty much discouraging right now, but if you're going to take a swing trade, best to be favoring the short side. I believe that selling an Alibaba out of the money bearish call spread, call credit spread above this 200-day moving average makes sense. I believe that that resistance is going to hold. I believe that the stock has a pretty clear path to that 100-day moving average. So there's a possible swing trade that you can be doing that also will allow you to distance yourself from the action and to take advantage of accelerated time premium decay. So you can see that 200-day moving average providing resistance, and we've got plenty of room on this trade down to the 100-day moving average. Alibaba, BABA, is your pick of the day. I like it on the short side. I think you're going to continue to see weak. Hello, traders. It's Thursday morning, July 14th. Let's get started with my previous pick. Couple of things. First of all, day trading. We are day trading. My prior pick, BABA, I did suggest that there's an out of the money call credit spread that you can sell. It is a neutral to slightly bearish strategy that takes advantage of accelerated time decay. I still like it. However, most of your trading right now should be day trading. When you come in, give the stock time, give the market time. You don't have to chase anything. You had a nice gap up on BABA. This is a 5-minute chart. And then you can see how those gains were given back instantly. The prior day was super weak. That's why I liked it so much. We'll take a look at that daily chart in a second. So you get this sell off. This tells you that that gap up was nothing but a fake. Now the sellers are back in. Take out the low of the day. If you're watching it on the open, that was an excellent entry point, especially after a long red candle like that and follow through. You had a nice opportunity to make some money. How would you know that you need to take profits? Well, first of all, the market is super, super choppy. You get big ranges. This is a huge drop. Lots of profit to be made on that. When you have these opportunities to lock in gains, do it because the market's probably going to head the other way. That's what it's been doing every day. That has been one constant for the last few months. The market has lots of two-sided view. This is nice, ZS. And if you draw to the bottom of that red candle right there, which did come on decent volume, so that would be legitimate. You can see how it's already breaking through that, but I'm going to draw a more conservative trend line. I think that if ZS breaks through this upward sloping trend line, that you're going to, and so basically the low right here, let's click on that and find out what that low was, and I'll give you a parameter for it. So the low on that was 144, let's say. If ZS is below 144 and it can stay below it with stacked red candles, you're going to have a nice short because it's going to try and challenge that low right there. You can see the relative weakness. Ding, ding, ding. Here's your pick of the day. ZTS. Incidentally, well, with the S&P down 50 points, I don't know that we're going to get much of a bounce in the stock. It closed below the 50-day moving average. We want to see it below the 50-day moving average today on the open. We also want to see it below yesterday's low. That would confirm that we have a breakdown. Remember, one of the variables that I used in this search was algo line new breakdown bearish D1. Okay, so there you can see it, and there you can see that variable. So I'm just going to go through and confirm because I still have to get to another variable that I used, describe it a little bit, show you how it works. So you also had a horizontal support level right in here, touch, 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 that was violated. You also had a failed breakout. So you've got resistance, resistance, many, many touches. That was resistance, boom. Now it's support. That 100-day moving average provided resistance as well. And you can see how the stock was not able to get through it. Try, 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 back it off. Now we have a failed breakout. Okay, that would be a good pattern to trade in and of itself. And we have follow through. And we have an upward sloping trend line breached to the downside. So what did the market do yesterday? We already went through this, but you can see generally it had a nice rebound off of the low and it finished within its range. So nothing too dramatic, but what I wanted to find was a stock that finished super, super weak. And that's why I used the HA candles as a variable. So we're going to go into a 5-minute chart. We're going to take a look at it. And there you can see the stock sold off. Big tell, huge tell, never bounced with the market. Never bounced. S&P 500 down hard. Double bottom, higher low. See you later. Fill in the gap. Get above the prior day's close. Beautiful. Look at that huge rally. Not this guy. Uh-uh. Closed on its low of the day. That tells you that because it wasn't able to retrace and fill some of this gap. Whap, 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 whap. I got more to sell. How many more you want to buy? I got more to sell. How many more you want to buy? I don't care that the market's up. I want out of this stock. That's the tell. Institutions are in there selling. That's why the system works. That's why you see these videos and the reviews pan out each and every time. So let's put up that HA pattern, and you can see when you have flat top red candles, that is a sign of selling pressure. So what we were looking for is more than two of these flat top red candles by using this variable right here. HA continuation, meaning we're looking for a continuation trade. We have at least two of these flat top reds. We could have many, many, many of them, and we had them on a 5-minute basis, which told me that the stock was weak into the close. ZTS is your stock pick of the day. We can go into a daily chart. Hello traders, it's Thursday, July 21st. It's been a week since I've done my last video. I released the last one before the open last Thursday, so let's start with that pick. That's how I like to start every one of these videos off so that you can go back, take a look at the performance, and know that this system works. So I highlighted ZTS as a short that I liked. There was a caveat to the trade. That caveat was that the stock had to be below the 50-day moving average. So you can see the stock did gap down a little bit, and right in here, it penetrated that 50-day moving average. So there was a chance to get in, and that was a loser. Call a spade, wasn't a big loser, but it was a loser. So I hope to do much better and redeem myself. Have not had many losers in the last 4 months. Market hits, it continues. I think KR is going to be the short that we go with. I like that. It's broken major support. The 200-day moving average is still intact. if the SPY is below 391, I like shorting KR. Let's take one more look at PG. So I want to make sure PG's actually got a lot more downside room. So I'm going to change my pick of the day to PG. So the caveat for PG, we're going to use the support level right here and this close. If PG is below 141.50 and the SPY is below 391, I like shorting PG. If the market is above, actually I didn't have a contingency on the market for Tesla, and there's a bullish explosion alert. Let's take a look at that. That's interesting. This is a daily chart, downward sloping trend line, breach the upside above the 100-day moving average. These explosion alerts come to us, news related. Interesting. I'll be taking a look at that a little bit later. Tesla. Tesla, look at that strength. You can buy Tesla today, Thursday, and you can hold some of it overnight. If you get really nice gains out of Tesla today, take some gains, keep some overnight. Hello, traders. It's Tuesday, July 26th. We're about an hour and a half before the open. Let's start with the last pick, see how it did. Tesla didn't have any market constraints on Tesla because the market was already breaking out. So we had a nice market tailwind. Loved the chart on Tesla. Video came out right around in here. You can see how the stock continued to move higher, closed on its high of the day. And as I mentioned in the video came out last Thursday. I said, I believe that we are going to see follow through buying on Tesla. So you could take some gains in here, hold a little bit of the position overnight. You should see some follow through. We got it the next morning, but market conditions deteriorated. We're going to get into that in a little bit, and you'll see in the chart how the 100-day moving average, which I also referenced in the video, came into play for Tesla. And there you can see I said, this is where you want to make sure that you're out of the position and taking gains on it because the stock is going to hit that resistance level. The other pick that I had was Procter & Gamble, PG, but we did have a market condition attached to this, and that condition was that the SPY had to be below 391. That is the 50-day moving average. That's a critical horizontal support level. We're going to reference that again today. Never got there. So we did not get a market breakdown. I'm going to give you two picks. Also got a downward sloping trend line right here. Breach to the upside. Nice gap higher. Big volume. Relative strength through horizontal resistance. 5-minute chart. Held all the gains yesterday. Never challenged the open yesterday. So very, very nice. Yeah, I like it. I think this is a stock that you can watch on the long side. I think there are going to be some opportunities for you to buy it when you get these waves of market strength Tuesday, Wednesday, and perhaps Thursday after the F. It's not too bad. Downward sloping trend line is intact below the 50-day moving average. That could work. LCID. LCID I like because we've got this upward sloping trend line here that is going to be breached on the downside if it takes out that 50-day moving average. You can also see that we had a horizontal breakout. There's your horizontal resistance, breakout above the 100-day moving average. Wham! Right back below the 100-day moving average, and now that is a failed breakout, and we see some momentum yesterday. I think LCID works also because we have this upward sloping trend line that also comes into play. Click there, click there. That's violated. It's got some nice downside potential. Doesn't have a lot of volume. Let's take a look at that 5-minute chart again. So you can see a nice steady, I think this is one that you'll want to watch. I'm going to go with LCID and I'm going to put a couple of constraints on it. First of all, for any bearish trade right now, S&P 500's got to be below 391. That's where the 50-day moving average comes into play. Also, you can see horizontal, its support now was resistance. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Lots of touches. and a general area between 391 and 393. So if this 50-day moving average is violated, okay, now I know I've got a market that's starting to soften. This move higher is starting to lose its steam. Now I want to focus on the bearish side a little bit more. LCID is the type of stock that I want to find. So the caveat, 391 is the key level on the S&P 500. As far as LCID, we want to see that stock below the 50-day moving average. I don't need to have it below this upward sloping trend line. I have enough things to tell me that it's going to soften up here. You've got Hello, traders. It's Monday, August 1st. We're about 2 hours into trading. Let's take a look at my last picks. I actually had a bullish and a bearish pick. Reason for that was we had some really important news pending. We had the FOMC statement, we had mega cap earnings that were on deck. Now we know how those have played out. Market looks really, really good, but we didn't know that a week ago when I recorded the video. WWE was my long pick, and I loved this long green candle and this breakout through horizontal resistance, now support. You can see how that support was confirmed, and the stock is starting to take off again. Downward sloping trend line, breach to the upside. That is your bullish flag formation. Decent volume, relative strength. It has all the characteristics we want. Unfortunately, when the market took off, the stock still needed to digest these gains right here. So we had a couple of days of weakness that we had to wade through before the stock finally got its footing again. I'm expecting it to continue to move higher. LCID. That was my bearish pick that I gave you. If the market had a negative reaction, I think this stock would have traded much lower. You can see, let's overlay the SPY so you can see. Look at that market rally. Boom, 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 boom. Beautiful. What did the stock do? Nada. Nothing. Can't get off the deck. That tells me this stock has a lot of relative weakness. Upward sloping trend line, breach to the downside, below the 100-day moving average, relative weakness. Yeah, this was a decent short. I really like Amazon. That's going to set up for a fantastic bullish put spread. Yes, I do actually like it on a day trading basis as well. That is going to be your stock pick of the day. When I do my next video, I'm quite confident that Amazon is going to be trading higher than it is right now. Thanks so much. Good luck with your trading. Fourth, let's get right to it. Amazon was my last pick of the day. Video came out August 1st, which was right here. I loved selling an out of the money bullish put spread, keying off of that 125 strike price right in here. You'd have to go out about 3 weeks or so, which is fine because I'm expecting the market to have some nervous jitters, but in general, for the bid the low of the year to hold up very, very well. We'll get into market analysis in a little bit, but you can see nice big gap up after earnings. These moves typically take a little time to digest. Once the stock has been able to hold the bid, it demonstrates that buyers are still engaged, and eventually the stock starts to lift off. Here's the 5-minute chart. You can see how beautifully Amazon went up yesterday. So along SQ has to get through the 100-day moving average. Right now, AMD is the best stock that I see in terms of being able to day trade it and in terms of being able to look and find a nice bullish put spread. So that 100-day moving average is right around $95. So I think that's going to be a pretty good level to look for that bullish put spread. But you can see we're fairly close to it. We're about $6 away, and the stock does have a tendency to make some pretty wild moves. So first thing I would want to do, I would want to see the S&P 500 find support. I want to make sure that this low of the day is holding, that we don't continue to drift lower in this channel. I'd also like to see this bullish 10P cross get us above this downward sloping trend line. Then I can feel pretty confident that at least for the day, AMD is going to have a decent market tailwind. It'll continue to grind higher. And As far as selling out of the money bullish put spreads on this stock, I would probably favor getting below that $90 level. It's going to require the stock to come back and test that 100-day moving average in order for us to sell that $90 put. I would normally not have a problem selling an out of the money bullish put spread on a stock like this, but I think the market's going to get a little bit tired in here. We don't like to see market rallies on low volume, and that's been an issue in the last stage of this rally. So I think the market's going to come in. When it does, I think you're going to have a chance for AMD to test this 100-day moving average again, and then you'll be able to sell a bullish put spread, maybe the 87.50, 85 bullish put spread on AMD, looking to get 50 cents for it. Go out 3 weeks or so, take advantage of accelerated time premium decay. As far as just flat out day trading, I like AMD. I think there are going to be some opportunities. Make sure that you wait for those dips to line up because this stock has. Good morning, traders. It is Wednesday, August 17th. We're about 10 minutes into trading, doing something a little bit different today. Want to try and capture some of the early price action. I'm going to be speaking about trading gaps down. So that's the theme for today. I'm going to try and have educational content in addition to the pick of the day. So we're going to go back and take a look at the daily chart on my last picks, which came out about a week ago. And AMD was a stock that I liked. And it was right in here when the video came out. It's been a dud. It really has not followed the market higher. So a little bit disappointing. Not the follow through that I'd wanted to see, especially on a decent market rally. The other pick was XOM. That was a bearish pick. It has not done much either. So it has not been able to rally with the market. I still believe that the energy sector is going to be fairly soft. The caveat, though, to XOM was it had to be below the 100-day moving average, which it has not been. The S&P 500 also needed to be below the 100-day moving average. It has not been. So we'll put that SMA up and you can see, no, there's no reason to take a short position in this market. But when the video came out, we had lighter volume rally on the S&P 500. I felt that going into my time off that the market had a chance to have a decent pullback. So I wanted to arm you with a bearish pick just in case that was happening, and a bullish pick. So do it. That's what we're looking for. So if I have to give you a pick, yeah, LOW could work very, very nicely. And let me take a look at where we might sell an out of the money bullish put spread. I like selling it below this 200-day moving average. So I would be looking to sell maybe the 215 strike. You can see how it is at 215.96. You can go short term on this as well. I believe that this stock is going to be able to preserve the opening price today, given the price action that we've seen so far. What's the market telling us? What do I want to see as somebody who right now is bearish and who has a short futures position on? Bearish 1OP cycle, I would like to see red candle, red candle. I got to see a red candle in here pretty soon, or this is going to tell me we're going nowhere fast, just chopping around. During a bearish 1OP cycle, fairly early in that cycle, I want to see whap, whap, whap. Not really getting that right now. I'll give it maybe another bar or two, and then I'm going to exit. What I do not want to see is I don't really want to get above the open from this candle. I really don't want to get above this price level right in here. I'd like to see that long red candle. And right now it's telling me the bid is still pretty persistent. I'm not seeing that heavy selling pressure like that. So buyers are still fairly engaged. And I believe that if we do see a long red candle in here, it could be a solo. So just because of what I'm seeing in here, if we had more progressive selling, that would tell me that they can attack that low of the day, they can flush out those sellers, and then they're going to look to continue to sell and take profits. What this is telling me right now is that no, we still have some support here, tails under body. These are just buyers lining up at the low of the day, and that long candle's probably not going to gain any traction. So those are my thoughts right now. Never bad to take profits. Let's see what happens. I'm not going to hang out on this trade for more than 10 or 15 minutes because it's the open and I don't know what is going to happen. I got in. My expectations were those red candles. I'm not getting it. So every minute that I wait in a short futures position, I get closer and closer to 50-50 probability. I'm not in this game for a 50-50 probability. I'd rather go to Vegas, drink some cocktails, and play that game. I want a 75% win rate or better. And if I do have some losers in there, it's okay. I want to keep them relatively small. Time is another way of stopping out your trades. So in this particular gap down, I want to see that follow through and I want to see it pretty soon. So let's talk about your bullish pick of the day. I'm looking to sell out of the money bullish put spreads. I like selling an out of the money bullish put spread, keying on LOW, and I'm not really sure where these options are priced right now, so let's take a look and see if we can pull up some option prices. I'd like to stay within 3 weeks or so, so let's take a look at the September 9th options. Let's see how far out of the money we can go on these. Stock is currently at 220. I'd like to get down to this 215, 210 price point, and so we've got 1, 2, 3 weeks out. 215, 210. I could do that for a $1 credit. I could do that for probably a $1.20 credit. 83-cent bid offered at 184. What can I get if I go lower than that? Well, let's try and go to all the strikes and see what all the price points might be. If I can do a 210, 205, that might actually work out a little bit better for me. And we'll click that, we'll click that. Now we'll see it's 49 cents bid offered at 126. I like to get a dollar for these spreads. And where does the 210 strike price put me? The 210 strike price actually puts me way down into the middle of this candle. I feel that opening price today will hold. I feel the middle of this long green candle will hold. I feel the 200-day moving average will hold. I feel that the upward sloping trend line will hold. So I'm going to be looking at that 210, 205 bullish put spread. Good morning, traders. It is Tuesday, August 23rd. We are about an hour before the open, and today I'm going to answer the age-old question, how do I enter a day trade? But before we get to that, I always like to review our previous pick so that you can see how well the system works. Our previous pick was LOW. Love this earnings reaction here. Had broken through horizontal resistance. You can see earnings before the open there. It is bumping up against the 200-day moving average. Typically, on a nice big move higher like that, we're going to see a little bit of profit taking, and it's going to take time for that stock to digest the news. However, we've seen some pretty heavy selling the last 2 days in the market. Look at how well the stock has been able to hold up. So, we wanted to sell an out of the money bullish put spread. I'm just dipping my toe into the water because, as you know from my previous video, I said the market is going to be pulling back. We've had a 12% run in a month. We're going to see some profit taking at the 200-day moving average. So just as we saw profit taking in LOW, we're seeing some profit taking in the S&P 500 as well. So we're waiting for this pullback in the market. We want to continue to sell out of the money bullish put spreads. Now that we know there's a little bit of selling, let's see how far down it goes. But hey, Pete, you got this LOW trade on. What do you do with it? We sold the 205, 200 bullish put spread. The expiration, I believe, was September 16th on that. So we've got plenty of time for the stock to find support. I'm going to be leaning on the opening of this long red or long green candle right here where I've got the line drawn, and that's approximately the 205 level. So if I come in yesterday and I go, oh my God, the S&P futures are down 60 points. I got to buy this thing back in. I'm on the wrong side of the market. When I put on a bullish put spread or any longer term swing trade, I'm really in it for the long haul and I want to give it the day to move around. So I'm not going to act hastily on the open and reel this thing back in. So I want to keep this video moving, but if you took a look at LOW, there's the opening right there. So if I bailed on that position right on the open, I'm not too happy about it. And folks, yesterday the S&P futures were down over 80 points. Holy cow. Look what this stock did. It was barely down on the day. So with regards to letter Z, Zillow, I also believe that you can sell an out of the money bearish call spread. And the strike price that we would want to use for that is $35 because that puts us above the 50-day moving average. We've got that breakdown. Stock should continue to drift lower. I like selling that 35, 36 bearish call spread using the September 2nd expiration and doing that for a 20-cent credit. My stop on that would be a rally above that $35 50-day moving average. That's how I would play it. So yes, I think Zillow is going to continue to decline and it's got plenty of room. Good morning, traders. It is Monday, August 29th. I am bearish. Let's get this video started. I got so much information to talk to you about. Right now, I see the market as having more weakness this morning. I'm going to show you how to leg out of a bullish put spread gone bad. And here's what we're looking at. We're looking at the LOW September 16th expiration. We sold the 205 puts and we bought the 200 puts, and the spread was established for a $1.05 credit. So right now, what we're going to be doing because of bearish sentiment is we're going to be buying back these 205 puts, and the trade is going to be from a neutral to slightly bullish posture to an outright bearish posture. So I better be very, very confident in my analysis. I've got to get this right. Friday would have actually been the ideal time to leg out of this, but I wasn't able to get a video done Friday. We're going to be taking a look at all the price action and everything. So make yourself comfortable. This is going to be a long one. So right now you can see $7.80 is where those options are offered. 755 bid. So we'd be able to buy those back in for 775, maybe 770. I'm going to go with 770. So if I initially put that credit on for $1.05 and I subtract that $1.05 from $7.70, that gives me $6.65. So that is my target price for those $200 puts. I'm going to be trying to sell those for $6.65. We're early in the day. We're only an hour and 20 minutes into trading. So we got plenty of time for this to work out. Here are the keys to legging out of a bullish put spread. You have to have confidence that the market is going to go down. That is the key. Second of all, you have to have relative weakness in the stock, and you can see 10 SI less than 0. So the stock has to be weak relative to the market. How do I know if we're going to continue to drift lower? Apple, there's an alert right now. I set an alert for Apple below the 200-day moving average, which is the low of the day. That's currently breached. Upward sloping trend line, breach to the downside below the 200-day moving average. Market moving lower. I like Apple short here. Let's make Apple short the trade of the day. Good morning, traders. It is Tuesday, August 30th. We're about 90 minutes into trading. Got a lot of information to cover. Yesterday, I did a video before the open. My focus was to show you how to leg out of a bullish put spread gone bad. So we're going to review that process, see how it fared. We'll take a look at the pick of the day yesterday, and we'll talk a little bit about the market and what the price action right now is telling us. First, before I do anything, let me put up my Twitter feed right here. And I want to show you a comment that I posted before the open. This is in the description area of the video. It's free. I post my pre-open market comments each day. You can click, link, see what I've got to say. Here are my pre-open market comments today. That red candle was not a fake. Which red candle? Well, the one that we saw last Friday, that heavy selling. Heavy selling, next leg lower will come. Again, these are my market comments before the open. Please read them. And I'm going to go right down to the day trading section. Day traders might have a shorting opportunity on the open today. Watch for at least 3 stacked consecutive red candles in the first 30 minutes of trading. If we see that pattern and we retrace more than half of the gap, we could see a gap reversal. So those were the instructions. And there is the long red candle that I referenced, and here is the chart that I provided before the open with examples of red candles that have come off of relative highs and the follow-through selling that we see. This morning did not catch us by surprise. We were ready for it. We're making a killing in the chat room. So let's take a look at how everything shaped up yesterday. My pick of the day was Apple. So let's go right to Apple. It was a short. In the video, you could see that the trend line that I had drawn, this was an alert line, had been breached and the stock had fallen down to the 200-day moving average. Look at the stock today. This is a beautiful trade. Apple's a great short. It's got room to get to the 50-day and the 100-day moving average. So let's take a look at the market. It's a really nice trade. We'll end this month on a positive note. I'll have another bearish pick for you. How did we know? What were the clues? So here is the opening gap higher. Red candle, red candle, red candle. We've actually filled in the gap completely just with the first 3 candles. Okay, shorting opportunity. The other thing that I mentioned to members is we're going to be starting out with our 1OP indicator cresting. This is a sign that selling pressure is starting to come. We get the bearish cross right about in here. Whoosh. Was that a beautiful sight? Daily chart, red candles. So yesterday, the move was just starting to set up when I did the video. And let's take a look at how those options actually fared. So now we're at a juncture today to where we've got this nice gap up. We've got this stacked red candle formation. We easily take out the 50-day moving average. When that low of the day failed on this type of price pattern after a gap up, you know you're going to get some momentum and you've got that 1OP bearish cross. So this would have been a much better day for me to do the video on. Let's take a look at what low did yesterday. Not a whole lot of anything. So right here you can see a doji. Didn't do much of anything. So when we bought those options back yesterday, we bought the 205 puts back and excuse me, we were short the September 16th 205 puts. We bought those back for $7.05 $7.70, and they closed the day yesterday. You can see this is where the stock closed yesterday. They closed about 30 cents lower than where we bought them back in. So if you were just going to close the trade out and move on, that would have been prudent. No problem with that thinking at all. You gave it a shot. You tried to leg out. You thought we maybe would have some continuation yesterday, some follow through selling. Didn't happen. The market rallied a little bit. So you could have exited the position. So let's take a look at low today. If you decided that no, I really believe that there's going to be additional market selling today, you could have sold those puts today, the 200 puts, successfully legged out of the position. Yes, you would have had some overnight risk in the position, but you would have been able to exit those puts for the same $7.70 that we bought the short puts back in at. We only need to buy them back for $6.65. That scratches the trade, and that would be perfectly fine also. In fact, oftentimes I'll take half of it off at a scratch, and then I'll let the other half run to see if I can get a little bit more for them and possibly even make money on the trade. So wait for those signs of momentum when you are legging out of those bullish put spreads. So again, the idea is we are going from a neutral to slightly bullish position here, and we're just expecting the stock to hold this level. It can rally. It can get through the 200-day moving average. That would be fine. It can stay flat. We're just expecting this price right here, the support level, to hold. And when it doesn't, all of a sudden, if we buy back that short put, we've gone from a neutral to slightly bullish position and more of a probability type of trade to outright bearish. Well, if we're going to change our sentiment like that, we better be damn sure that our forecast is right, because we don't want to be buying these back in and then have the stock fly higher. Now we've got a double whammy and even bigger losses. So the clue was the long red candle on the S&P 500 from Friday. This long red candle breaking through support. Okay, now I know that I need to be in damage control mode, and I need to, would not be bad. I like this setup. So there's your upward sloping trend line. This is going to be your pick of the day. Upward sloping trend line, breach to the downside, 50-day moving average, fails. Stock well below it, plenty of room down to the low of the year. Yep, look at this volume coming in. 1 OSI below zero. Everything's shaping up on a daily chart. I like that short. So now we could take a look at what the stock is doing. Here you can see yesterday, gap down. Unlike the market yesterday, which filled in much of the gap, let's go to that 5-minute chart for comparison. There's your gap down. Market was able to fill in that gap during the course of the day. Dow never did. In fact, Apple never did either. That's why it remained a good short. You can see upward sloping trend line. Stock finishes on a little weak note today. Look at that drop. Follow through below the prior day's low. This is a stock that does not move very quickly. It moves very gradually, so you don't have to hurry. On a stock like this, you definitely want to short on these bounces, and you want to see that continued weakness. So yes, I like DOW. That is going to be my last pick for August. I like it on. Good morning, traders. It is the first trading day of the month. It is September 1st, Thursday. Let's take a quick look at my last pick. I am bearish today. I've been bearish since before the open. Obviously, the market is in a downtrend right now. I am short a futures position. Should be getting a couple fills in here. So we'll take a look at the last pick, which was DOW. That was a short that I put out 2 days ago. Oh yeah, working out very nicely. Upward sloping trend line, breach to the downside, below the major moving averages. Let's put those up so we've got those readily available. And you can see below the 50-day moving average, everything lining up for this short. Really, really nice trade. Let's take a look at a couple